In the first week of February 2026, the cryptocurrency world experienced a surprising moment. Bitcoin fell below $70,000, reaching its lowest level in about 15 months, a milestone that only weeks earlier seemed unlikely to many investors and enthusiasts. The number 70,000 acted as a crucial psychological level for the market. It had become known in financial circles as a key support floor, meaning a price level investors believed would be hard to break to the downside. When it finally did, it triggered a wave of alarm and speculation. Some even spoke of a crisis of faith in Bitcoin, questioning whether the world's largest cryptocurrency could still serve as a store of value in uncertain times. Curiously, this decline erased significant gains accumulated since the U.S. presidential election of 2024. After Donald Trump's victory, expectations of more crypto-friendly policies pushed Bitcoin to record highs near $126,000 in October 2025. The recent drop, which briefly passed through the $67,000 range, represents a loss of nearly half of that peak value. One detail often overlooked by those who only track Bitcoin's price is that this correction did not hit Bitcoin alone. Cryptocurrencies such as Ether and XRP also suffered notable declines, with XRP at times falling even more sharply in percentage terms than Bitcoin. This synchronized movement among major tokens reinforces the idea that volatility is not exclusive to Bitcoin, but a broader phenomenon across the crypto market. When confidence weakens, another intriguing aspect is that this downturn has been linked to macroeconomic and political factors outside the crypto universe. The appointment of a new U.S. Federal Reserve chair with a tougher stance on monetary stimulus may be reducing global liquidity, a condition that had previously benefited speculative assets, including cryptocurrencies. Bitcoin's extreme volatility has produced unusual stories in the past, but it remains fascinating to see how economic narratives and market sentiment can shift so quickly. As with historical bubbles in other asset classes, markets sometimes enter phases where price declines are driven as much by technical factors, such as forced liquidations, as by psychological elements of fear and uncertainty. Finally, it is striking that despite these significant drops, some investors continue to see long-term opportunities, whether due to belief in the future adoption of cryptocurrencies or the hope that downturns will eventually give way to strong recoveries. Bitcoin's history has been marked by spectacular highs and dramatic falls, and each of these moments carries unexpected lessons about markets, technology, and human behavior.